I'm the co-founder of Wisebanyan, and Wisebanyan is the world's first free financial advisor. So we are what a lot of people call Robo Advisors. And the idea of a Robo Advisor is really now almost any company or any app that helps you do automatic savings, automatic investing, automatic financial planning. We've all kind of been lumped together as Robo Advisors. It's this idea of automatic or robotically advising you on your money. And so the spectrum of Robo Advisors now is pretty wide. I think this trend kind of started, I would say 3, 4, 5 years ago was really when we started seeing people mention us as robo-advisors. But if you look at how it's broken down now, there are a lot of companies, we're all lumped together, but we do a lot of different things. So there are companies that are almost like micro savers. So a lot of these are apps where it helps you save a little bit at a time. There are kind of the companies that are trying to help people get started. There are companies that are trying to, all the way at the other end of the spectrum, disrupt like the Merrill Lynch wealth managements of the world. And then there are companies that are trying to do automated hedge funds, automated a lot of different things. And so today what I wanted to talk about, I actually wanted to do something a little bit different. I don't know what everyone else has been doing, but our agenda is an hour, give or take. And rather than me standing up here just like yapping away about robo-advisors for an hour, I figured I'd run through something pretty quick that is really about how my co-founder, my team looks at this space, and then leave the rest kind of to discussion, Q&A, and see where the rest of it goes, because I feel like that'll be a lot more interesting. And hopefully I can give a little bit of perspective from how we run our company, but also how we see this landscape as a whole. So the way we look at it, let me just make this full screen. All right, so full screen doesn't really work. So the way we look at it is a lot of people look at fintech and they say, oh, this is kind of slow, or we shouldn't have humans anymore. So let's disrupt that. Let's replace it with machines. And I think that's really where the name robo-advisor came from. I think it's more a term that incumbents have placed upon fintech firms. But the thing is, when you think about automation and disruption, we don't think about robo trip planners or robo travel planning, right? It's this idea where the industry is just moving towards automation, moving towards technology, and pretty soon it'll just be personal finance, consumer finance, finance itself. It'll just be driven by technology. So when I think about robo advisory or fintech as a whole, what I think the biggest opportunity for disruption actually is the distribution of financial services. So if you think about what that means, it's really about how do you and I as consumers find the product that we need? How do we decide on the product that we need, and how do we use the product that we need? I feel like that's actually the biggest opportunity. And so when I look at that, it's really easy. An example that's really easy is actually insurance. And I would actually say insurance oftentimes is a vertical of financial services, so it can be fintech as well. And now there are a lot of robo-insurers, if you want to call it that. But if you look at insurance, what's happened is a lot of companies are still kind of in the in the past, days of the past, right? They're really distributing their products with sales agents, with people on the ground, with calls, with knocking on your door. But what you're seeing is the industry is shifting away from selling to buying, right? The power is being given to the consumer because of technology. And now it's really much more up to hopefully the consumer being able to find what's best for them, choose it, and buy it. And the other thing that you're seeing that's really pushing that trend is digital, because digital is a way that we can empower just the mass consumer to be able to buy the insurance that they need rather than be sold the insurance that they may or may not need. And what you're seeing is even in InsurTech, even though the client experience and the customer experience is getting a lot better, what you're still missing is distribution. If you look at a lot of InsurTech companies, there are some out there. There's one called Policy Genius, for example. There's some called like CoverHound, Metromile, etc. What you're still seeing is they're giving a really cool user experience. Some are really rethinking the business model, which is also exciting. But a lot of these companies are going back to a distribution problem. Now they have an amazing insurance product, and they still are having trouble. How do I get this insurance product in front of millions of consumers, or in the hands of millions of consumers, so that they can choose? And so what you end up seeing now is a lot of even InsurTech, or if you talk about mortgages, same thing, mortgage tech. Every single financial vertical, that tech vertical still has that distribution problem. It's really about how do you get in front of people, and what they're really relying on right now is expensive paid displayed advertising, right? It's like circa 2001, even though their technology might be year 2017. And it's not just insurance, right? I talked about mortgages, but it's also personal saving, wealth management, financial planning, the list kind of goes on and on. And so there's actually two big reasons for this kind of disruption distribution opportunity. And the two reasons are millennials and relationships. And so number one, millennials, right? Millennials are actually the biggest generation that this country has ever seen, the biggest consumer generation. They're highly educated, very diverse, financially savvy for their age compared to previous generations at the same age. But also if you look at it, they will actually be the recipients of the biggest wealth transfer in the history of the world. So if you look at that, now you have this kind of mass consumer generation coming of age, getting to a point where they start needing to consume all these different products. And it's a question of how will they find all these products and how will they consume it? 90 million, the list kind of goes on. And the other one is actually relationships. So kind of question for you guys. I don't know how many people here are from financial services, but there's a list of 6 companies I put up there. What do these companies have in common?
All of the same services.
Interesting. So all of the same services. Any other thoughts, ideas? What do these companies have in common? If you ask my younger sister, she might have never heard of any of them. That might be another one. But the really big one is that the chart's a little bit small, but this is kind of a history of these companies going way back to kind of like the 60s and 70s. And you see all of these companies now have consolidated into Bank of America. So to your point, right, they all now essentially offer the same services because they're all part of the same exact company. It's not just those 6 companies, right? If you look at this chart that I found online, this one goes back to the 1990s, but you see all of these companies have essentially consolidated into 4 companies. If I were to map out, say, 500 companies, they might have consolidated into 8 companies. And this is what's really driving financial services right now, right? We've all heard of Wells Fargo, Bank of America, Citigroup, it's these companies. And what you have is, back in the day, 90s or before, you had all these companies that were monolines. They were really good at a region, at a demographic, at a specific product, and then they consolidated in that mega bank trend, right? And really what happened was the relationship became consolidated. Now I can walk into Chase and start getting all these other products I need at every region, regardless of my demographic. And so now what you're seeing is technology is really starting to disrupt that by unbundling it, right? If you look at, this is Wells Fargo's website, if you can see it kind of up top here are all the verticals that they serve, whether it's banking, loans, insurance, investment, retirement, and now you see just hundreds of companies trying to disrupt every single vertical of what these banks are doing, including, you know, our old logos also up there. But if you keep looking at where this trend is going, right now it's gone back to monolines, right? All these technology companies are disrupting every single vertical. They're focused on different products. It's back to that monoline, but they're all digital. But if you look at this trend of what's happened, 20 years ago when it all consolidated, it's because relationships are convenient, relationships are strong, they drive consumer behavior. And so if you look at digital, you're going to see that same trend. Right now we're in the monoline phase, but soon you're going to see this consolidation where really it's about the companies that are driving the relationships, where someone can go open one company's app or online portal and essentially you get everything that they need, right? You're not going to see a millennial have 15 different apps for all the different financial needs that they're going to have. You might see that now, but in a few years you definitely won't. And so those are the two big trends. And then it's really about this idea of who will win that distribution, right? There are a lot of ways to think about it. It's about the most innovative product. It's more than just marketplaces or some of the trends we're seeing now. It's really going back to that idea of that relationship. And so this is really how we think about Robo Advisory. I know it's a little bit long-winded, but a lot of people just say, if you automate financial services, you're a Robo Advisor. But really the way we look at it is the real power of Robo Advisory and the next wave and the new way of Robo Advisory is not a company that simply comes along and says, that in-person guy used to charge you 1%, we're gonna charge you half of that, and it's gonna be online. That's not the real power of what this vertical is really about, although that's how it started. The real power of Robo-Advisory is a way for financial services to essentially automate that entire relationship. If you look at all these things like insurance, mortgages, credit, these can all be spokes to the wheel that's really driven by Robo-Advisory. And so when I think about who wins at the end of the day, I know I talked about Wells Fargo, talked about Bank of America, talked about the incumbents, and then talked about fintech. The way I see it, it's really a race, right? The incumbents have distribution. A lot of them already have the products, but what they don't have is the innovation, right? Or what they don't have is the technology. And if you look at fintech as a whole, what they do have is abundant amounts of technology and innovation, but they're racing now to basically get distribution, right? You can have the coolest product possible, but if only 100 people are using it in fintech, you're not really going to get anywhere. So it's kind of this race is on where incumbents should be trying to race towards innovation, and then the innovators should be trying to race towards distribution, essentially. And so that's kind of where I want to end it in terms of how I'm thinking about Robo Advisory, what Robo Advisory is, and would love to kind of open up to discussion and Q&A in terms of what you guys might be thinking about. Yeah?
So maybe I overheard it, but what does the company do?
Oh yeah, so kicking off, Wisebanyan is our, we call ourselves the world's first free financial advisor. So we essentially help people save, invest money, financial plan, and find all the other products and services that they need, all for free and with no minimums. So what that means is if you wanted to sign up, you could sign up on our app or online. It takes just a few minutes, and then you can kind of go on your way towards achieving your goals. So it's really about things like what are you trying to save money for, what are you trying to plan for. It could be a rainy day fund, it could be sending your kids to college, buying a home one day, almost any life goal that I can think of. And we personalize a financial plan for you. We automate everything from auto deposits to reinvestments to reallocating everything that you need to getting that product that you need. So a good example could be someone who started an account a few years ago, wanted to save for their very first home. So they started planning, saving money for a down payment. And then eventually they're going to get to that down payment and they're going to need a mortgage or they're going to need to find home insurance. And so we take them all the way from that very kind of beginning step, that very first dollar, all the way to that final product achievement that they need. Yeah.
So you also do you're modeling your financial products yourselves?
Yeah, so we are a registered investment advisor. We're also a broker-dealer. And so when we do investments, it's really long-term allocation. So we do passive-based investing. Yeah. But we help people do that in an automated fashion, essentially.
So I manage mutual funds, so I know the challenges of this, but
yeah.
How do you monetize if it's free?
Yeah, so it's all freemium. So the basic the baseline product is all free. So the automated financial plan, the free saving, free goal-based saving and investing, that's all free. But we also offer our own services that are really tailored for kind of specific needs. And then we also offer these other products. So one of our own services is called tax protection. And that's really for people who might be in the higher tax bracket, who want to manage their tax slots more efficiently. So they could turn on that product and it pays us a monthly subscription fee. Or you could really, when you get to achieving your goals and you need those other products and services, you can also get them from Wisebanyan through Wisebanyan, essentially. Yeah?
Is it available in the US only? Or?
Yeah, so we are only available in the US because we're regulated by FINRA, by the SEC. But also our target demographic is really the people who haven't really started saving yet, haven't really started investing yet, or haven't achieved these major life goals yet, and they want to do that. And that's really right now for us geared in the US. But if you look kind of globally, I think Robo Advisory has become more of a trend in the last few years. So good example is in Canada, there's a Robo Advisor called Wealthsimple. They're pretty large there in that market. In the UK, there are a few Robo Advisors now. One is called Nutmeg, so they're doing something very similar, but kind of in the European market. In Hong Kong, I think, launched a few Robo Advisors. Asia has some. There's one or a few in Australia. So it's really geared, I think, towards markets where it's regulated by a certain entity, and that's where you're seeing a lot of fintech Robo Advisors pop up. Yeah.
So how do you tackle this distribution problem?
Yeah.
How do you do it right now? You have an app and you try to get it out to the people?
Yeah, so we solve distribution in a few ways. rather than relying on paid advertising, we are all about word of mouth, right? It's this idea that if you can help people achieve real life goals, it's almost a topic that everyone wants to talk to others about, right? In the US, it's somewhat taboo to talk about personal finances. You don't really show up at a dinner party and say, holy crap, I have all this credit card debt, now what do I do, right? But you do see a lot of conversations are about this idea of like when you achieve something. So think about how many times you've talked to a friend and you're like, congrats on buying that new home, or how, like, that's an awesome car that you have, or really happy that, your kids are going to college, etc. So we're really tying into those pieces of it. But the other way we think about distribution is rather than talking about product and then saying we're here to try to innovate, insurance and then try to sell insurance, we are really trying to disrupt how people get started. Right? So this idea of starting to save is very powerful because it's something that everyone wants to do. And it's something that we used to do, whether it's in a piggy bank underneath our mattress or in the banks, right? But if you look at this new paradigm now, there's also this shift happening where the millennial consumers, one, are used to basically getting no interest rate from their banks. So it's never been this idea that I need to start, a checking savings account right away. And also they're looking for an experience that's transparent, that's easy, that's mobile friendly, that's 24/7. And we're also seeing a shift in kind of the banking sector where there's a big need there. So what we're doing is giving people a new way to start saving. And that's kind of like the very top of the funnel. And then we guide them through everything else they need. Yeah.
The way I see all the financial services, especially banks, they're super slow in innovating. Either there's one cool app, but it only works with that app, or there's Android Pay and it only works in that country,
Yeah.
and so on. Do you see that this might change in the future, that there's might be more standardization, that I don't have to, as an app developer or as a startup, have to talk to each and every bank in every country, but that adoption becomes slower maybe, or is it maybe even the other way around?
Yeah, so I think in the US, it's been somewhat difficult, right? Kind of just jumping into financial services nerdy side, right? The US, if you want to start what people call like a neobank or a digital bank, you have to get a bank charter license or you have to partner with a bank that has a bank charter license. But if you look at, say, Europe, what's interesting is regulators have opened up sandboxes. So fintech companies can come work directly with the regulators, and it's a lot clearer of a path to get to build your bank, right? Whereas the US, the Office of Currency Comptroller, or I think the C's might be flipped, started talking about this a few months ago, earlier this year, but it hasn't even opened up the sandbox yet. So you see regulatory hurdles being pretty large here in the States. Two examples I think are actually really interesting about where this could go are actually abroad. So I mentioned Europe. I think Europe actually has a few very interesting digital neobanks. One is called N26. I don't know if you've ever heard of it. Their app is pretty cool. But to your point, I think they're really thinking hard about how to solve the problem of if I have this, what happens if I go somewhere else, right? Or my life kind of changes. So I have to now download 4 or 5 different apps, 4 or 5 different banks. And I think they're trying to solve that kind of like issue in a pretty interesting way, right? They, a while ago, issued, I think it's like a debit card that also does currency exchanges on the go, right? So they're really thinking about people and their lives changing. The other one that I think is super interesting is actually in Asia. So the way I was talking about distribution here, I think one of the more interesting ways to distribute financial services is really thinking about new entry points, right? So we weren't really reinventing the wheel, but thinking about when people start saving, I think is a very interesting new entry point. But in Asia, I think one of their strongest entry points has been actually the idea of communication, right? So there's a company called Alibaba. They have a product called Alipay. But essentially, they were thinking of chat as a service. And then on top of that kind of chat might not be the right word for them, but on top of that kind of chat platform, they've built financial services on top of it. And I think that's actually been one of the kind of most powerful case studies, because now you see there people who are using products that are fully integrated, not with just this idea of saving my money, and then when I need to spend it, I'm gonna go somewhere else, and then when I need to transfer it, I'm gonna go somewhere else. But they almost have it all in one, connected to how you interact with other people. So people who use that product, you see them talking to their friends and family about different things, and suddenly they can easily transfer transfer money while they're talking to them about something. And on top of that, while they're using it, they can go check their different accounts. They can go purchase things. They can go get a loan for the purchases that they're trying to do. So I feel like that's really interesting, and they're solving it in the right way where they're rethinking distribution. So I think any company that can really do that would really solve the problem that you're talking about in terms of how do I make it much more convenient, and how do I make it kind of follow the lives of people's kind of changing lives. Yeah.
So this is something that we talk about in our own office, but how much interaction is there with a Robo Advisor in terms of actually human beings talking on the phone as opposed to chatting? The reason I'm saying that is there's just been proliferation in the wealth management industry of advisors trying to do some kind of robo platform.
Yeah.
It seems with very little human interaction. And it's growing and it's working, but it's all occurring under one of the most smoothest bull markets in history. And you know, as I'm sure you know, right, the moment you have any kind of a meaningful decline, which will come at some point in our lifetimes, I wonder if you're going to have challenges in a robo advisory platform keeping those clients and dealing with suddenly people saying, I need to talk to somebody on the phone. Because the role, I think, of a lot of investment advisors is less about managing money as opposed to managing emotion.
Yeah. So that one's very interesting, right? It's like, has everyone here invested their own money before? Oh, that's not too many. So you guys can probably, I'm surprised you didn't raise your hand, but but anyone who's invested their own money before knows what you're talking about, right? Like, I've always been a big proponent of, investing, starting early, right? Investing small but frequently, passive investing, etc. But even as kind of markets or investments go up and down, even if you know they can go up and down and you've kind of expected and prepared for it, it's still kind of an emotional roller coaster. So I think you're absolutely right there. I think what we're seeing is it has to be done in the right way. And so there are a few ways to do it, I think. The way we think about it is that investing is not this most central piece of what we do. If you think about what we do, it's really about saving is a big one. So we also allow cash-based savings, but we're really driven by this financial plan. So we're helping you decide how to get to all your different goals, and investing can be one means of how to get to certain goals. And so when you think about that, it's almost like this product universe where investing is one piece of it. And certainly when the market goes up and down, becomes more volatile, we're going to have to focus on that piece a little bit more. But it's not like our whole product and the whole company is driven just by investment. So I think that's one way to do it. Another way I think that would be really interesting, or starting to see signs of it, is that it's really about how you are able to address client service right now. So I think what we're seeing is a lot of companies are just saying, well, we're basically going to minimize the amount of work and interactions we're going to have with people, right, with our clients. And that's how we're going to solve it. And you're seeing it kind of work right now because people might not need those interactions. But I think the better way to do it is, how can we use technology not to just minimize or remove all these touch points that people have, but how do I use technology to give people at least the same amount or even more touch points? It doesn't necessarily have to be that touch point needs to be that they're calling someone. And I think what I'm seeing, at least from my view, is that there are a lot of companies who aren't even thinking about that. They're just basically saying, we're going to eliminate client service and we're going to put an email address there and just kind of see what happens. And I think that's not going to work well. And so when we think about our product, we do the second piece quite a bit too, right? Because if you think about client service, it's almost this idea of, can we answer your question right when you have your question, or right before, or you're about to have that question? That would be the perfect scenario. The imperfect scenario is what really happens right now, where someone is using your product, some part isn't clear, so now they have a question pop up. Now they spend all this time trying to find the answer to the question. They cannot find the answer. Then they spend time trying to find a way to contact your company. They finally find it. They contact you, and it's kind of starting from step one, right? Whereas perfect client service would almost be this idea that your product can give all the touch points that people need, and client service is almost done through your product. I think if companies can do that well, it might help address when markets are volatile. And it's not to say that you still won't have a person there, but when markets are volatile, what are people's questions? What are they trying to learn? What are they trying to understand? Can you build a product that's so smart based on technology that can be customized, that's personalized to situations, and can give people all those answers that they need, even if it's not necessarily someone on the other side of the phone talking to them? I think another interesting one that I'm seeing is a lot of companies are basically saying, what if we just use chatbots? I think, or this idea of like AI, I feel like it's not quite there yet. I would love to see companies do it very, very well, especially in financial services. But I think right now it's a little bit too buzzy. I see a lot of companies basically say, well, we'll replace with the chatbot. And the first question I ask that person when they're talking about that is, have you ever used a chatbot? Because I've used a number of them. And oftentimes they're more frustrating than even trying to find a phone number and call someone right now. So if you then put that on top of people's money and life savings, I can just see that not working as well as people think right now. Yeah.
Touching on another point of the user interaction, I guess this saving plan and so on is a pretty long-term relationship that you're having, which means probably a couple of years until you see some meaningful results and feedback and so on. Do you manage to keep the relationship to your customers over that time frame? Or how do you manage to keep that relationship? Yeah,
so we really do, and the relationship part is really important. I think what we're seeing right now in fintech and also other parts of Robo Advisory is a lot of these tech companies are coming from the mindset of consumer internet, right? And consumer internet companies are talking like, they talk about days and months. That's what they talk about, right? It's like, how quickly can I get someone to sign up? How quickly can I get them to buy something or do it, a transaction? And then what happens in the first 3 months? And then that's pretty much about it because they're about to move on. I think in financial services, to your point, it should really be thought about in years, lifetimes, right? If you manage someone's wealth, ideally you should be able to also help their children, their family. So it's that idea, and I feel like sometimes that's a little bit missing. I think the way we think about it is it's about showing people progress each step of the way. And progress may be really different for someone who's 18, just started, is putting $5 away towards a goal, compared to someone who's 45, just had, their kids are about to go off to college, or their kids are thinking about college, or someone who's 60 who's now thinking about retirement. And so the way we think about it is really, how do you personalize it to each person, not just how old they are, but to each person's financial needs and financial situation. And then how do we show them the right amount of achievement that they need? And how do we get them to that kind of next step? And for us, the relationship is really important because we're all about that entire kind of life cycle. So when we think about retention, right, or whether or not our users and clients are using or leaving Wisebanyan, we're thinking about the really long term. So when we look at it, 99% of our clients stay with us month over month, year over year, which is pretty impressive. So it's this idea of taking a technology, building something that's as intuitive as consumer internet products, but something that's as trustworthy and long-term thinking as financial service companies. And kind of melding those two makes really interesting kind of challenges and problems to solve. Yeah.
Touching on that small personal anecdote, when you every now and then you might get a new phone. Yeah. And then all the apps might download again or not. And then it happens that your app isn't downloaded to the phone. And do you still reach them again? Yeah. So we have a web page as well, and then we are also on Android, iOS, iWatch, Android Wear. But the way we see people use it is actually most people use two platforms when they use Wisebanyan. So they use web and they use mobile or maybe their watch. And so what they're really trying to do is, web is for when they're doing their longer term check-ins, right? When they're sitting down and figuring out, am I really getting close to buying a home one day? Or like, oh, I just got all my down payment, I got everything ready, now I'm gonna go get my mortgage, right? Even though we've made it easy to do on our app, we're still seeing a lot of people make the bigger financial decisions kind of in front of their desktop. But we're seeing most of our clients use two platforms because when they're on the go or when they're just checking in to see, did something work recently? Can I just change the setting? Can I just check in on where I am? Can I show someone what I'm doing? That's usually on like a mobile device. And so that's a behavior we really are excited about, and that's one that we really encourage. And so that also helps too, right? Because people are thinking about the long term. So their phones can come and go, but we see even when that happens, they're downloading it to their next device, they're downloading it to more devices, and we're seeing all these different touch points kind of in different parts of their like day-to-day life. Okay, that's encouraging.
Yeah. So then question for you guys, right? Where do you, when you think about financial services, where do you think it's all going, right? Robo, I think, is just one way to talk about it all, or people say fintech. But what do you think would be the most exciting part as a consumer of where all this ends up going, whether it's, you know, in a year, 5 years, 10 years from now? Yeah.
Yeah, for me, let's say in a year, it would be exciting enough if I could just pay with my phone everywhere. Like, basically, like to do with Alipay, I think they can, it works flawlessly as far as I understood, but I have so many problems. I tried NFC with my Android phone that should emulate a debit card, which mostly doesn't work. Yeah, so I hope that this is going to fix that in the next 1 or 2 years.
Interesting. What if, so I really like that too. I feel like that's what most people like in this, right now in this moment want to expect, right? If we can have self-driving cars, why can't I pay for something with all these devices that I have? I feel like what we're seeing though is, if I had to bet, I think what would be really interesting would be that we might not actually get there the way we think about it, where it's like I have my phone, I carry it with me everywhere, I can't just pay anything with this, right? I feel like there's a lot of regulatory hurdles. There are a lot of companies that own very specific parts of the payment system, the rails, and what you're seeing is it's not like the technology is there. We could do it, but all the parties aren't on the same page, and so that's why it's not working. And so I think what we're actually going to see is it's going to take longer than we expect, but it's actually going to bypass that step. And it's going to get to a point where rather than I have to pay this way, what if you can get to a point where you don't have to actually go through a motion of paying, right? So I don't know what exactly it'll look like, but think about consumption, right? It's like Amazon was testing that store where you can go and get everything you need and you just walk out. Right? That's pretty cool. I know part of it is driven by NFC technology, but it's this idea of why do I even have to think about the idea of paying the money, right? This merchant really wants my money. Why can't they do the work to actually get it? And I'll just consume the products I want. And then, yeah, exactly. So Uber has also solved it in a different way. You have to pay the first time, you have to link it all up. And then you kind of go through this motion of I can just get places, I don't have to pay for it. I think in fintech, there's also this, what if you could do that kind of all throughout? And it's not just for buying a product, but what if, you know, I'm saving for this mortgage, why do, when I get to end, do I have to re-link up everything? I'm giving a company a lot of money or a lot of money every month. Shouldn't they figure out how to be able to do it? What if the company where you're using to save it actually then gives you the product and everything's already there and you never have to pay? Right? Or even taxes. I think in the US it's very different. That might never get solved. But there are countries where rather than I refile, I've already given the government my taxes, right? And at the end I have to then file to get a portion back or pay more. What if even those things were completely rethought through and it's already done automatically for you kind of every week, every month? That would be kind of cool.
Austria just introduced this automatic filing this year.
Yeah, that's what I was reading about.
Yeah, but I objected it because I want to see it myself.
Yeah, but it's almost this idea, I think what might actually happen will be we all still want to be able to pay for things electronically. We'll never quite get there. It'll take longer and suddenly we'll live in this kind of consumption or consumer, digital consumer world where we've gotten rid of payments and that'll be easy.
Like identification. You are this person, you've got this service, and money gets to the merchant.
Exactly, and we're seeing, I think the panel right before me was about encryption. I know it's like right now a little bit overhyped, but when people talk about blockchain, too many people talk about the cryptocurrencies. I feel like that's just gambling. But one really interesting movement in blockchain is actually identity verification. So with what you're talking about, I feel like we're actually moving faster in that direction, technology-wise, than we are with payments. And so we could get to a point where we could do identity verification completely electronically in a pretty foolproof way and just have that in a way tied with payments. What about anyone else here? Is there anything that you would just kind of love to see with your money? I mean, I'm asking partly because I have curiosity, but also partly selfishly, right? It's like we're trying to solve mass consumer problems. People who use our product are the mass consumer. So we're always trying to think about pain points that we have as a consumer. Yeah?
One, the idea of combining or guess it's rollovers, but the idea of you have all these accounts everywhere. I've got a savings account here, and I've got a checking account there, and I've got this old 401k or IRA sitting somewhere.
Yeah.
And it'd be lovely to just like at one point be able to see where all that is, and then have somebody help me consolidate that all into one single place.
Yeah, so that's one we've heard a lot. And even I myself have heard and felt it, right? So I started this company with my co-founder now 4 years ago. I had a bunch of different finance jobs over the years before, so I had all these old 401ks. And up until like a few months ago, I still had one old 401k. And everyone was giving me a tough time about it because they're like, well, you started this finance company that helps people do all this stuff, and you yourselves haven't done it. Why? Right? And I basically said, look, laziness is one. Like consumers, like I myself am lazy as well. The company that I had it held at didn't make it any easier, right? It was almost like download this packet, fax it into this number, and then we'll call you, and then you do some more stuff, and like cross your fingers, it might go through. And so once I saw that, I was like, is it really? I'm just gonna leave it till I have time. And so that has also been one of the biggest client demands. So right now we have about 35,000 people who are actively using Wisebanyan, and I will say this question or this ask comes through like hundreds of times a day. And so we're moving down that route where it's like, how can we help people automate it? I think one thing we're seeing goes back to that counterparty challenge that I talked about with payments, right? With this, it's we can do as much work as we possibly can for our consumers and our users, but then we eventually have to interact with this other party, and this other party has no incentive to help at all, right? Even though it's your money, which is like shocking. And so we've thought about it in different ways. I would say on the brick and mortar side, the experience I really enjoy is actually Vanguard. So Vanguard, when you need to roll over an account to them, they do it manually, but they basically kind of assign a person to you who will see you through the entire process and all the processes. So they will get on the phone with you and the other side. They'll do all the research, and at the last moment say, okay, log in here, call in here, you verify everything, and then they take it over. And so it helps. It's still work, but it helps. And so we looked at that and we said, how do you do an experience like that digitally? And so a lot of what we do is actually try to be really smart about knowing whether or not this is a problem for people rather than waiting for them to ask us to help them with it. And then the other one is trying to automate as much of it as possible, where it's the collection of information side. Then we can just basically present you with a plan of action and say, is this what you want? Modify anything that you want, and then let us do all the work and then bring you in at the last moment that you need to come in if the counterparty needs you. And then let's also automate keeping you updated, right? So I think that's helping, but I think it's still a really big problem that we're seeing in the industry. Yeah.
As you're asking about pain points, one thing that I'd also like to see improved is identification. Over the last year, I wanted to start investing, but I never managed to sign up. First of all, in 26, I tried 2 times sign up, and identity verification did not work. And then I tried wanted to buy some stocks.
Yeah.
Also, identification did not work. So, and I'm an IT, quite tech-savvy guy, but why do we have to sign up and do verification every time we sign up to a new company and product? Maybe it would be awesome to have something similar to Facebook login or Google Plus login, single sign-on, that already has this verification on there. For example, in Austria, there is already from the state, there's some card that's called Bürger card. It already did the really good verification that you are the person, but it's not integrated in those products.
Yeah.
Having something that maybe uses this thing or some single sign-on that can be used throughout several financial services would be really great.
Yeah, I definitely agree. And I think when we're able to do that, it'll also help solve the problem that you just mentioned about rollovers, right? Because I think a lot of companies, even though part of it might be they're not set up to be scalable to really help with this, but part of it's also they don't really have a great process where they're like, now someone's just calling or emailing and they want to move all their money, but how do we know this is that person, right? Even though the way they do it right now of jumping on the phone, asking you questions that, people might have already gotten of yours might not be the best either. I think for them, the identity verification part is actually a challenge, and the way they solve it is manually, and so that causes what you're talking about too. I think on that side, one part that's interesting is, one, I personally, and also for my company's sake, would love to have that problem solved too, because that's one where we face as well. I think some of the companies that I'm seeing that are really interesting are actually in that space. So either in encryption, trying to do ID verification or something along those lines, or even if it's not using blockchain or anything else like that, just trying to solve that in a centralized way has been really interesting. So I sit on a advisory board for a investment company called Village Capital. And what they do is they actually have portfolios of companies in all these different verticals, and they really focus on underserved markets, underrepresented founders, et cetera. And so what's really interesting is I sit on the advisory board for fintech, and every year when they do a cohort, I basically try to mentor and help the companies through different parts of go-to-market, or something that I've already been through in the last years, or even at my previous company. And some of the companies I've seen go through the cohorts recently are really trying to solve what you're talking about. So there's one company that I mentored, it was called Blue Check. And their whole thesis is, what if identity verification could just be centralized? Like, forget if it's new innovative technology, but if I can centralize it, and once I identify and I verify you for one thing, everyone can come ping me and I can say, same person already verified. Or even if it's a completely different product and needs more information, I can say, almost verified, and basically just ping you and get a little bit more and get you all the way through. And one thing that they've done that's been very interesting is they've tried starting in financial services. And it turns out financial services is really hairy, and it's really hard to get companies to say, you know what, I will use Blue Check, rather than I'm going to go through my old channels, which might be LexisNexis, whoever it may be. We're going to ping a bunch of databases. It might not have the best hit rate, and then when it doesn't work, we'll just solve it by having someone call you and you mailing in a bunch of different forms. So they were having a hard time getting into financial services, so they actually looked at different verticals that would use it to try to go to market and kind of start centralizing it, right? Because the power of centralization is, if one company can centralize most of it, eventually you'll hit a tipping point where hopefully everyone just says, we will use that service, and it'll be easier for everyone, consumers. And so they actually started off in I think it was like the e-cigarette space, because it turns out that there are a lot of different spaces now that need to verify people's age because you're doing online purchases. But they still need to verify a whole bunch of other things along with age, right? So they started building this database, and then they started finding all these tertiary verticals that wanted to do the same thing for a slightly different reason. And so now there are websites where you buy high-end equipment or high-end film or high-end rentals now are using them as well, right? Because they have this big database of consumers already that they verified, and it makes it really easy for different companies to plug in, and makes it easy for that consumer. And so now you see them like plant their flag in one vertical, and they're slowly growing into other verticals, and now they're seeing some, in a way, early adopters in financial services want to use it. And so I think it's going to be a hard battle, but I'm starting to see other companies doing the same thing. And even if at the end of the day it's a few companies, at least you're like, there's 3 options for you to automatically verify yourself. That would be pretty amazing. I think that one's going to take a while, though. It's this adoption issue where you see a lot of incumbents, they're going to have a hard time adopting it until these companies essentially have enough distribution where the power is really on the consumer side.
I see that. I think it's going to be a winner takes it all.
Mm-hmm.
Because right now you log in Facebook and Google, that's pretty much it.
Yeah. I think right now, I feel like most companies that do some sort of automatic authentication use those 2, but I see it every so often. I still see a few others. I feel like the difference is going to be who is able to make a big footprint with information that's really personal, right? So like Facebook and Google, maybe they'll actually move in that direction and they already have a head start. But you need companies that can verify beyond just, this is, I think, the right person, but if it's not, no biggie. To the point of, if this is not the right person, there could be like huge financial consequences for it. I think it's what company can really bridge that first, or companies. But yeah, I agree. It's a network. It's a natural network effect. Yeah. All right, let me see. Any other thoughts, comments, questions on FinTech, Robo Advisory? I know last panel you guys said you guys started talking about like startups and entrepreneurship and then just kind of like went in a different direction. But anything else that you guys want to talk about in the FinTech space? Yeah.
You said you started 4 years ago?
Yeah.
What were your biggest challenges, specifically as a FinTech, not as a startup, but in this space?
Yeah, I feel like in FinTech, one of the biggest challenges is actually regulatory. So I think you had asked a question earlier, and I said we were regulated. So we own several entities, and they're all regulated essentially, which is good and bad. So I think it creates a challenge. It means that to start a FinTech company is a lot more work than just, I will create a web page, people will come use it. That might work at the very, very beginning, but if you really want to do a lot for the consumer, you eventually have to move into an area that's regulated. And so what that means is it's a much bigger hurdle for companies to really start and get to a decent scale. And so I think what you end up seeing is it's a slower pace of innovation, right? There are a lot more things where you're like, why isn't it this way yet? And it's because in a way that there aren't enough companies really tackling that. There might be a lot that are in the very first phase of tackling it, everyone wants to, and then they hit that regulatory hurdle and it really weeds out how many companies are serious about it and can do it. I think on the flip side though, when you think about regulation, you really do need it in financial services and FinTech, right? And so a lot of people have now come to us and said, I really like your product, why don't you bring this product to this other country? And oftentimes our answer is, one, we haven't fully addressed this market yet, the opportunity is still really big, but the other one is, it's really this regulatory hurdle. And also if there are markets where the regulatory kind of network or infrastructure isn't quite there yet or isn't as strong, it actually hurts us, right? Because if you think about what we do, we don't want it to be an unregulated space. I'd rather just know very clearly what all the rules are, which sometimes is also difficulty, but it's like, I'd rather you just tell me very clearly what all the rules are, even if there are 100,000 different rules, and I'll just make sure everything follows that. And then I know that there won't be other companies that come in and do something that's not right and hurt the entire space, right? Because we're really built on trust, we're really built on people's life savings. And the other thing I think about too is, so that was also our biggest challenge. And then the other thing I think about too, in terms of FinTech companies as a whole and the challenges that they should really think about, I think funding is actually a really big one for FinTech companies. I think companies, including ourselves, but our peers and everyone else, really need to think about how they get to scale and what does that mean. And I think you and I were talking a little bit earlier where when you guys are helping companies build apps, one advice you give them is, really budget enough for marketing. And you're saying a lot of people don't necessarily take that advice. But that's really what we think about too, whether or not you call it marketing. But if you think about the space, if you get a few hundred people using your product, especially consumer product, great. But that's nothing, that's scratching the surface. If you get a few thousand people using it, still just scratching the surface. In order for your company to do what you want it to do, you need millions of people using it, right? And so how do you actually get there? Because if you don't get there, there isn't really a paradigm where you have a company that can just have a few thousand, that'll be really interesting. Because financial services is really about how do you get to that mass consumer on the consumer side, on the B2C side. And so that's the other thing I would really urge people who want to work in FinTech, who want to build companies in FinTech, to really think about how do I actually get to the point where this is really relevant? How many people does that take? And then how do I actually market or build up that distribution so I actually get there? I think a lot of companies are going down the route of, I'll figure that out, one piece at a time, I'll figure it out later. And for now, I'll just kind of throw a bunch of cash at things and just start seeing some people come in and it's all kind of working. And I think that's going to be really difficult.
But maybe they have another business model. I think they want to grow up and start up, grow up and sell their business to big companies.
Yeah.
For example, in Russia, so I am working in Syria with a bank and every company come in my bank and said that we want to sell our startup. Please look at us like this. I mean, they have another business model to sell and start and to think about next business. Maybe so. No, here.
Yeah, I think here you're seeing a little bit of that right now in terms of people being able to do exactly what you said this company did. But I think what we're seeing a lot more of right now is everyone's calling it almost this bubble, but I think it's less of a bubble because the need is still there. It's not fully solved yet. I think it's more a lot of companies are starting to realize that they never really thought that piece of it through. And they just were thinking, how do I just do a much better client experience, user experience? Very important still, or a new brand. But in financial services, you also have to really think through what is a super solid business model, ideally a super solid and innovative business model, and you pair that together. But I think a lot of companies have put that to come later, and now it's almost this vicious cycle where they don't have that. They need that to fund the marketing piece, the distribution piece that they also haven't really thought through. And now it's which problem do I solve first, and they both need to be solved, and it gets very, very difficult very fast. And so I think that's why I encourage a lot of fintech founders and entrepreneurs to do. Like, a lot of my advice when I'm mentoring is really just that, right? It's going to take a while if you really want to build that solid, innovative business model, and then it's going to take 5x longer to build a really interesting way of distributing your products. And chances are, the failure rate's going to be really high. But if you can't do either, then just pause right there and make sure you get that piece done, or don't even try, because you'll get to a point where you've put a lot of time and energy into it, and then you hit those two walls. Yeah. Awesome. So I think this was scheduled for 4 to 5. I know we started a little bit later, but it's about 5 o'clock. So hopefully this has been interesting. If you want to chat any more, feel free to just shoot me an email. I'm Vickie, Vicki, @wisebanyan.com. Awesome. Thank you guys.